Welcome to another edition of the Chicks on the Right podcast, where we talk to our BFF and sponsor, Zach Abraham from Bulwark Capital Management, who always gives us fantastic advice and information about what's going on in the financial world and in the markets and all of those things. And Zach, today, we're a little freaked out. So the world feels like it's ending. We just watched that horrible Barack and Michelle Obama show on Netflix.
What's the name of it?
Leave the world behind or something.
Have you seen that, Zach?
It was awful.
No.
Don't watch
I wasn't
it.
planning on it.
Just don't.
Okay, don't.
Tell all your friends to stay away from it.
Yeah.
Just don't watch it.
It's just horrible. But it's one of those apocalyptic, dystopian, like everything is falling apart, the world is ending kind of movies. And so, you see something like that, it kind of puts you on edge for a few days. And one of the things that we talked about together before we went live in our own podcast this morning was just how uneasy we're feeling. And that extends to our sort of financial world as well. And so something that I did a year ago, I think at this point, was I got this burr where I was like, I have to withdraw money from the bank and just have it in cash in a safe in my house. And I did that. And so then that got us to talking. What is your advice for helping people prepare for disasters financially?
Yeah, because I will tell you that with my kids, my older kids, I have a 34-year-old and a 30-year-old. One of the things that I've told my boys specifically, when he graduated college, I was like, cash is really good. You need to make sure you have cash on hand. When all the shit hits the fan, you gotta make sure you have some cash. But is that bad advice? Now I'm starting to think that's terrible advice. I'm a terrible mother. I gave him the worst advice ever. Was I a terrible mom, Zach?
No,
I did the wrong thing.
So I think like anything else, it comes down to amounts and percentages and all that other kind of stuff, right? So I think that and I think there's a lot of good examples to back this up. I think that for the average family, if you're able to, I think having $5,000 to $10,000 of cash on hand is not a bad idea. But I think that the one caveat I would throw in there is that we really need to update what our definition of a financial disaster is, because when we need to look, and I think the easiest way to do is to look back in history. When we talk financial disasters, I think the number one thing that we're all talking about are like an 08, 09 Great Depressionary redux where things drop, right? I think that we all need to accept the fact that while that will happen, and as a matter of fact, I think that you're probably going to look, I will be shocked if you do not see a sharply down stock market next year. And it doesn't mean that it has to plummet, but I think giving back the majority of what it made this year because it's nonsensical. And that kind of fits our outlook anyway. I think that you're probably going to be range bound here for a while. And you get to the bottom of the range and everybody's going to freak out. The world's ending. Get to the top of the range. Everybody's all excited again. And you just keep doing it. And we've done it. This is the third time we've done it. So, but I think that everybody needs to adjust to something, meaning when we went through COVID, in my opinion, the game changed. And the reason I say the game changed is the stock market was up 16.5% in the same year, where you had a 23.8% annualized drop in economic output in a single quarter, right? During the COVID shutdown. To put that in perspective, in 08, 09, the great financial crisis, the economy contracted 3.8% top to bottom. COVID, we were 23.8 in a quarter. Okay. The stock market went up 16%. Why? Because they made it rain, right? You're so far down the path now, you're not going to see a depression. You're not going to see a stock market that goes down 85%. The fear is a Zimbabwe type situation. And look, we're not on the edge of that either. Okay. If we got to that point, you would see Europe blow up first. You would see China blow up first. There are other places that are even worse off than we are. But we all need to adjust our thinking a little bit and define what is. And the easiest way I think to look at this, you guys, is what happened in the Great Depression and what happened in 08, 09 is called deflation, right? Where the value of a currency goes up versus goods, right? Now, it doesn't ever feel good because we all own goods and own assets, and then by default, if the dollar is going up in value, they're going down, right? So those are what we've experienced. But what's really interesting is, do you know of another single civilization in the history of mankind that went away or collapsed because their currency went up too much in value, right? The answer is no, right?
Mm-hmm.
What creates societal collapse? Its currency collapses, which means what happens to asset prices? They go through the roof, right? The best performing stock market in my lifetime has been the Zimbabwe stock market. I think it's averaged like, I don't know, like 600-700% a year. Now the problem is that its currency was depreciating by 800 or 900% a year, right? So what I'm saying is we need to redefine it. The government, especially since 0809, certainly since COVID, has changed the rules. They have decided that extended or protracted or elongated or however you want, economic downturns are no longer politically palatable, right? And we don't care how much money we have to print. We don't care how much debt we have. And the simple reason for this is pretty self-evident, meaning if you print a boatload of money, and we're seeing it happen and you generate 40-year high inflation, you can still get reelected, right? But if you allow things to go down in price and you allow stock market crashes, they're going to throw you out, right? As long as they're NASDAQ companies and their Bitcoin's going up, everybody's fine, right? Even if they're dealing with inflation. So I think that we need to recalculate what we're looking at. So to answer the question directly, I think having $5,000 to $10,000 cash on hand makes all the sense in the world. But I look at that as sort of get out of town money, meaning, don't make it a pile. And think about it this way, we're worried about the collapse of the dollar, so we're going to pull all of our money out in cash and sit in dollars. That doesn't make a lot of sense, right?
Okay.
Well, and I know that when I went to the bank to even it was such
Oh,
an
yeah.
ordeal to go and ask for my
Right.
own money.
Oh my gosh,
Like,
I can imagine.
Oh, yeah.
Yeah.
Oh my God. You go into a bank and you ask for a significant amount of money in cash, and it
Yeah.
is like they are on guard and they don't
Yeah.
like it. And it's
Yeah.
weird.
Yeah. Yep.
Yeah, no, well, why do you need $40,000? And I'm like, because I deposited that one.
Well, and I
Right.
wasn't anywhere close.
Yeah,
to that
even
amount.
like five.
But
Even like if you want to
Yeah.
get 5,000, like if from a bank, if you're trying to do a down payment on something, or like even for just a huge purchase, like a home or a car or something like that, they don't. You're right. They make a big fuss about it. It takes so much, and you're like, this is my money.
Yeah, right. Yeah. I don't
Right.
need a reason, actually, right?
Right.
The reason
What's
is,
the deal?
yeah, the reason is because it's Tuesday afternoon and I want my bloody money,
Yeah.
right?
Meanwhile, some
Exactly.
guy in Russia can hack into your account and get it in like 2 seconds, and you're like, wait a second, nobody asked him.
Yeah, geez.
Uh-huh.
Yeah, or they just sit, if they're really smart, they don't even need to hack anymore. They just need to align themselves with some Ukrainian politicians, and they'll just they'll flow the money into your bank account for you. Right?
Bingo.
Yeah, so
yeah.
Is there like a percentage though, just for, because people that are listening potentially have income levels all over the place. So is there like a rule of thumb amount of cash to have on hand that is a percentage of what you would typically have in a savings account, for example?
Not really. But
Okay.
I would say generally, I think having an amount of cash on hand to facilitate all of your financial needs, including potentially paying bills for a month. So figuring out what that amount is for a month. Because like I said, I was having this conversation with a client earlier today, so it's fresh in my mind. We just have to change the way we're thinking and identify the risks properly, meaning it sounds crazy. And eventually, this dynamic will change because all dynamics do. But like I said, the other thing that we need to fully accept is we do not live in a free market society anymore. Meaning government has decided that they want, and the Federal Reserve has decided that they want to target asset prices, right? Which means what? It means it's not a free market. And what do politicians benefit from? They benefit from things going up. So we've changed policy to match that as well, which is one of the reasons we've told our clients, look, I think you need to manage risk, and I think you need to be very careful because of valuations in the environment that we currently live in. Here's the other thing. Me sitting there saying the stock market isn't going to drop 85%, I don't mean your account can't, right? Like I can show you all kinds of things that have gone down 80 to 90% over the last 2 years. I'm just saying which is why I think people, and it's why it's so pernicious right now, is the average retail investor is loaded up on the most ridiculous stuff. And the reason why is because that's the stuff that's performed the best. So it's drawn them, it's drawn people into it. People love chasing charts and things like that. So just because I say that that's not going to happen to the stock market, and I know there's people that'll hear this be like, he's a Pollyanna. And I'm like, no, again, go back to COVID, right? A 23.8% hit. And that's never happened before. That's I think the worst quarter in the Great Depression, you were down like 6%. Right. So, I mean, to put that in context and to sit there and see that we can take that level of economic shock, we print a bunch of money and still finish with the stock market up 16%. People need to realize that. So where we're looking at it and we're going, look, I think the market's going to give us a lot of opportunities. And I think next year is going to be one of those opportunities where things are going to get hit, but it's going to be an opportunity to buy other good things because the inflationary game is going to keep going on in earnest. So I would say, a month of cash sitting on hand is a good idea. I think, and I think that's kind of a backstop. But the other thing you don't want to do, another alternative is not to sell every stock or every asset you own and buy a bunch of physical gold and stick it in a safe either. Same issue. So anyway, it's a month of cash on hand I think is all you need to do. And then I think the other big important thing you need to do is just properly manage the risk in the rest of your investment portfolio.
And the best way for people to do that is to make sure that they are following you.
Yeah. So we put out a 15-minute, 20-minute show every single day called Daily Dots, talking about all the important information that's occurred in the economy. And then we do a weekly show so they can get all of that for free, no paywall at Know Your Risk Radio podcast. And we're on every podcasting site. Same place they listen to your guys' podcast. They can type in Know Your Risk Radio and pull us up too.
Awesome.
Perfect.
Fantastic.
Thank you,
Thank
Zach.
Zach.
So appreciated as always.
Have a wonderful week, and thanks for having me on.
Investment advisory services offered through Trek Financial LLC, an SEC-registered investment advisor. Information presented is for educational purposes only. It should not be considered specific investment advice, does not take into consideration your specific situation, and does not intend to make an offer or solicitation for the sale or purchase of any securities or investment strategies. Investments involve risk and are not guaranteed, and past performance is no guarantee of future results. For specific tax advice on strategy, consult with a qualified tax professional before implementing any strategy discussed herein.